Hello everyone and welcome to another weekly wrap-up video. Now I didn't have one last week because I was abroad, as you know. I went to a conference, so I wasn't around, so I thought forget about that one. I'll do one for this past week. So the week before we didn't have, but this week we'll have. So let's put this up here first now, and let me just make myself a little smaller and get this a little bigger. Here we are. Right, now as you know, for the week of 13th of 17th of October, I posted before all the swing days and the swing hours, and I added videos Monday to Thursday. As you know, I don't work on Fridays, um, to see what I think should be happening, and with respect to the swing days as well. So let's keep this up for a moment. Monday, Wednesday. Also, when you want to check these out, which is if you're in the members area, always when you're trading 1 week, look to see where the next week's going to be with respect to swing days, because if it's a Friday, Monday, you want to know. And so let's take a look. Gold. Right, let's start off with gold. So this is Friday, that's last Friday, and that's Monday. All right, so with Monday we've started there. This is why it's important to know if you've got a Friday Monday situation. Let's do this. If you've got a Friday and Monday situation, they kind of follow each other up. So that's Thursday, Friday, Monday, breaking out. Now, as you know, with the gold, I posted before 4,210. I also did mention we could go up to 4,250 as well. So until we get a sell kind of a signal, this could be going upwards, and that's pretty much what the market did. All right, going up into those levels. I talked about these levels on Monday. All right, so that was that, and 4,210 was my target from ages ago, like a few weeks ago. Remember, I talked about where we should be heading if we had this push up to the upside. All right, breaking, going up. So these levels were all on the cards. So I'm thinking you should have made quite a bit of money, especially using the swing days to push to the upside. Because if I got an upper target, the direction is up, you want to use the swing days to find places to get in. Also during the week, remember I had all the hours as well from ages ago. So Monday, Friday, Monday, swing day, market just going to the upside. Also on Tuesday I did mention, let's come here, if the market comes down, I said you could go back up. You can watch those videos on Vimeo as well. If you go to Vimeo and look for Global Trader Club, you'll find those videos there. I don't put them on YouTube daily, so once the week is over, the whole public can see it. So coming back down, that's the trading hours going to the upside. Those are the trading hours. Nothing really happened here. Sideways kind of market. Thursday again, trading hours, market pushing up and then just going to the upside. As you can see, the hours are now becoming targets. And on Friday, market selling off at the trade hours. Boom. Trade hours again. Boom. Coming down into the target zones of the previous periods, right? So 4,210, like I said, was previously a target. Now they've come there and kind of like locked that in. All right, so that's now a support level. As you can see, we can get rid of that. That 4,210, as you know, was a manual measurement. If you know technical analysis, you know, you probably, well, if you took technical analysis from me, you definitely know how to do that. So it's just a matter of targeting yourself, as I explained in the video, and just pushing forward using the swing days and the trading hours and the intraday pricing. Basically, that's just it. Euro dollar, Monday, Friday. That's your Monday, that's your Friday. I talked about coming into this blue bar, and as you can see, if you did that Friday, nice and easy, goodbye kiss on a Friday. If you're using your PST, you would have ended up 1650, pretty much 1650 right there. Okay, so that was it. If you check out the hours as well for Friday, Just sold the highs and took it down in there. And that was, like I said, Monday. All right, last week we had Thursday. This week, Monday, market retests Thursday low and just pushes to the upside. Coming into the blue bar where they sold off before, so it's only logical to sell there again. SP 500, let's see. SP 500, Monday and Wednesday and Friday, so let's check it out. That's your Friday, that's your Wednesday. Monday inside bar, nothing to do. So Wednesday market comes up into the calls bar, market causes push down. Friday comes into, well, it comes into that one there, well, nearly into there. Okay, so pretty much on the edge there. And that's basically it. Okay, but you can see Friday also market buying is like from the lows, it's like Wednesday, Friday. What time did it do that? London. All right, see London, and then market pushing to the upside, going up again. All right, so it's no big deal. And on Wednesday, as you know, Wednesday was also a swing day. There's your trading hours there. And then Thursday coming all the way into Friday, and Friday buying from the lows. Let's take a look at Bitcoin. I won't look at Nasdaq and Dow Jones because like it's the same kind of stuff. You can check the hours. The swing days for them are here. All right, so that's your Dow Jones Monday or Tuesday and Friday. Nasdaq Monday and Friday. Okay, and the hours. This is Monday, Tuesday. These are all UTC +3, by the way. All right, that's your Tuesday. That's your Wednesday. It's your Thursday, and that's your Friday. All right, so you can pause the video and check to see how that panned out. Remember, once again, it's my time zone, so you've got to convert it to yours or to New York to check out according to your platform. Now, Bitcoin was interesting, and I talked about this before. If you watched my videos earlier in the week, I said this should break. Okay, remember? On Tuesday's video, let's do this. I talked about this zone, and I also talked about this little zone here, and I said this will eventually break. So if on a swing day it comes down there, you can, buy if it's on a swing day. And you'll see swing day for Bitcoin was Wednesday or Thursday. On Wednesday and Thursday they chose to sell off, but that was logical because I told you it should eventually break this one. And I said if it makes a sharp and deadly fall down, you can buy. All right, but that didn't happen on a swing day. This happened on a Friday, but you could see where it tapped. The red bar is the cause of the buy. All right, so simple stuff. Also, you have to do is match your hours, for example, whenever you want to buy and sell. Let's say Wednesday, Thursday. Why Wednesday, Thursday? Because we're following it to the downside. Remember, I said this should break. So let's do this. Wednesday, Thursday. All right, so once it breaks, in any case, we're going down, and this is what I said should happen. On Tuesday, I think I would have said it on Tuesday, because on Monday I had a platform issue. I didn't have Bitcoin on there, but on Tuesday it did that, and I did say a bounce up should sell off. It didn't close the gap, but the sell-off was still there. And if you used, let's take a look at Wednesday, Thursday, and check out the hours. Let's do it. Wednesday, let's see, London pre-trade 9:40. So these are the hours: 9:40, 12:40 to 1:40, and 4:15. So 9:40. My time is there. 12:40 is there. 140 is going to be that one, and that's when it starts to slide to the downside. Then we've got 415 New York, which is right there. Market sizzling a little bit down, nothing hectic. Okay, still kind of like sideways. Closing, that's your opening, that's your closing, so it's closing lower. And on Thursday, let's see what the hours were. 9:55, 11:35, 12:30. So we've got 9:45 is there. 11:35 is there. What else have I got? 2:50 to 9:15. 2:50. 2:50 is that bar. Market turns around into 9:15 right there. All right, so it makes the low pretty much at 9:15, nice and easy. Okay, so if you're following it to the downside, that's just fine. As you can see, it should have been okay. And on Friday, market sold more. Let's take a look at Friday. What do I have? London, this is pre-London, 1040, 230, 330, 1040. That's your 1040. What was that one? 845 to 915. 845. There is your 845. Oops. That's your 845 to 915. Market sizzling down. 605, and then we've got 230, 330. 605. 605 is on that bar. All right, so market never makes it any higher, pushes down into 230, 330. 230 is there. Oops. Market on the upside comes down into 330 is there. Okay, and that's basically, yeah, those are the lows. So that's basically it. Friday just taking a fall to the downside. Now when you're trading such things, by the way, you can also use your PST on a 4-hour chart. It'll work fine. So if you want to get out, if you know want to kind of like calculate it, you can do it on the 4-hour as well, daily as well. There we go, and so on. All right, you can see it's like bouncing off lines, so you should always have a price. Okay, and that's basically it. But we should be heading to the downside, as we talked about it before, into this zone, which should bring us back into 100k. All right, and we might even have further falls, but we'll see how things pan out. On the weekly, this HCL one is 97,742. See the red line? Okay, 97,742, and the market bounced up slightly above the goodbye kiss, all right, of there, and that zone is a target zone as well. But on the PST, we've got 97. New week will open up, we'll have a lower HCL1 line, so it should push lower. Okay, and that's how it is. So in short, swing days plus your trading hours and your technical analysis pricing, or if you're using PST or the way I do technical analysis, you can just integrate it into that and just trade it off that as well. Okay, and that's basically it. Let's take a look at NASDAQ, because I want to show you something. These weekly wrap-ups are also good when we do a weekly summary, because according to technical analysis, we can see what I said in the video and how things panned out, and that's important to understand, because technical analysis is, it's like what we're looking for. Now, because we've got technical analysis with swing days and trading hours, we've got NASDAQ, Dow Jones, SP 500, right? They all got a Monday, all right? And on Monday, there was nothing to really trade because we weren't anywhere where we wanted to sell. Remember, the sell zone is this zone here. So this is where the market should be selling off. And what we had was, because indices normally go together, right? So we're looking out for Monday, but Monday that we were nowhere to be selling. And then the other days are Tuesday, Wednesday, because SP 500's got a Wednesday, Dow Jones got a Tuesday, right? So I also have to keep an eye out for Tuesday, which is there, right? And the market comes back and closes the gap and then sells off all the way into there on Friday before they buy it again. And that's how it is. Okay, so that's where we're at. Now, as you can see, the market is still bullish, and I talked about that as well. I said, guys, the market is still bullish. We haven't broken anything yet. It's just within this range. So if the market dips down, you want to be buying if it's a swing day, good price, and a trade hour. And that's basically it. All right, so looking out for that is important so that you can kind of like see where you're at with your trading in terms of time and price. And if we take a look at Dow as well, it's going to give us a good perspective too. Okay, let's check that out too. All right, here we are. Now with the Dow Jones, remember, we had Monday or Tuesday and Friday. So Monday, Tuesday, right? This is Monday. Now with Monday, Tuesday, and that's your goodbye kiss. I talked about that as well. Remember, if you took technical analysis from me, your lines are going to be like very, very accurate. You're just going to say to yourself, wait a minute, this is there, and then you know where to put, you know where to get in, you know where to put your stop loss. And then Wednesday, SP 500, remember? So Monday, Tuesday, Wednesday's got an SP 500. It's a goodbye kiss, and then nailing it down all the way in there. So this one we can actually take out. Why? Because you don't want to be using a swing day where there's nothing really in terms of pricing. Okay, and if you take a look, this would have been, yeah, the red line is drawn after that. So what we would have had is just bouncing off the line, as you can see. But this line would have been drawn after this bar closed off. All right, so that's nothing to look out for here, and that's basically it. All right, but seeing the swing days in advance is definitely an advantage, and then you can kind of like get your targets as well. Look, for example, on Friday, see how the PST targets worked out. 41, 42, 43. So targeting 45,434, 541. Let's do that. 434. 434 is right there. Okay. Now, why is that important? Because when the market's got a target, right, you're picking them off with the blue dotted lines from a PST calculation. So you got 45,434, 45,541. Let's bring this down. 45,541 is there. All right. So this is your like a lower zone. So why is that important? Well, because on Friday, let's take out the hours again. You see I've got hours here, right? We've got 8:45 to 9:15, 10:40, and so on. So if I take a look, this is 10:40 bar. Remember, this is a 15-minute chart. So at 10:40, I am at PST levels, and it's a trading hour. All right. So, and also, it's a swing day, right? So it's a swing day. The market's made a low. It's come to the PST level. Perfect for buying. All right. this is how it is. And then you see you go all the way up in there. Let's check out the other hours too, because you want to use the timing for targeting as well. You don't want to just be using price for targeting. Obviously, pricing for targets, is obviously good to do. But when you got timing as well for entry and exit, that's like your double, jeopardy kind of thing. So I've got 230, 330, and I said if it's got direction, it could go all the way into 1155. And look, this is your 1155, pretty much closing, all right? And then this is your 230, all right? So you can see the direction, you see the impulse move there. 330, 230 to 330 is there, all right? But this is nothing you can do here. Why? Well, first of all, it's a swing day from the low, all right, because the market came down, right? So once the market came down, it did the targets. Once it's done the targets and it's a trading hour, you don't want to be buying up here anymore, okay? And you don't want to be selling up here either, because it's a swing day from a low when the market came down. So you want to be looking for a place to go long at a good price at the right time. What you can do in a situation like this, you would have waited, okay, to see if it comes back to close gap or whatever, and if it didn't, you just let it go, okay? But if you bought the lows or you bought the U-turn, then you could have targeted these and the daily pivot plus. You could have put your stop upwards to target the trading hour of 11 o'clock. Still would have given you a bit of an extra profit, okay? And obviously with your technical analysis, you should also be doing targeting as well. So the important thing to understand here, as you can see, to make sure you get the swing days, you get the swing hours, and also you get your technical pricing. If you're using the PST levels, that's good. PST works really good with the timing that we do. So I like to use it, and it also it's a really interesting indicator. I've done a video on this before, but like for example here, all right, you see how if you just join 2 candles or 3 candles, you can just see where we're going to be selling off, right, on the PST, and that will always have a price for you, okay? And then all you got to do is say, well, we're at the price and this is a trading hour, let's just sell it off, and that's your low risk, high return trade. All the best, have a great weekend, and hopefully we'll catch up next week